Welcome to Trade of the Week. I'm Zidati Kuma, and this week we're covering U.S. tech stocks, Amazon, Salesforce, Cisco Systems, and Fidelity National Information Services. And joining us with his analysis is Loyiso Mbeta, founder and CEO of Mshindi Bingwa Group Holdings. Thank you so much for your time, Loyiso. I'm quite surprised that we're looking at U.S. tech stocks and you're on the bullish side, considering that a lot of these are considered quite full and quite frothy. Has anything changed?
Yeah, I think the tech sector or any sort of company that is tech heavy, I mean, Amazon is not really seen as a tech stock in terms of its classification on the exchange, but because it's so tech heavy, it has a product, right?
Yeah.
But because it's so tech heavy, it sort of, some of these companies, like for example, a Meta can be classified as a communications stock in terms of its sector, but still classified as a tech stock. So they all sort of become a hybrid type of businesses that we look at now that we classify as tech stocks, but they're not really purely tech stocks.
Okay.
So the reason of the focus is, again, one of the major headlines this week is Trump and
Elon and Trump and China. It's Trump and someone. Trump
exactly,
and
exactly. You know, and tariffs are coming back on the agenda again, and tech has always been sort of on the periphery of any major tariffs that could be implemented. So most investors tend to look at the tech sector, and because it sort of underpins the broader indices, I thought, okay, let me take a look at a vast number of companies that do have sort of a very, very strong tech feel to them.
Yeah.
And I must say, from what I will look at now, starting with Amazon, is quite an interesting picture. And this is why I actually want to say to investors, you know, there can always be volatility in the short term, but look at that volatility in context of the bigger picture.
Yeah.
And this is where, for me, the Elliott wave principle sort of gives us that bigger picture from a technical perspective, so that if there's any volatility that we do experience in the next couple of days or weeks based on the second round of US-China tariff discussions, at least you know where the market is likely to go after all that volatility.
Okay. Well, let's get into the different stocks, and we're starting off with Amazon, and you're taking this one back to 1997.
Yeah. So again, it's all about looking at the bigger picture and putting the recent rally in perspective, especially the rally that we saw after the announcement of the 90-day pause in tariffs, which really gave the market some stimulus to start rallying again. So going back to 1997, we can see Amazon had a very, very strong run, which peaked at $188 back in July of 2021. Now, without getting into the detail of this big rally, I'm looking at this significant peak as either a higher degree wave 1 or a lower degree wave 3. And then we have this significant bear market correction, which saw Amazon shed about 57%. So a very significant bear market, which I'm labeling as either wave 2 or wave 4. So the tentative labels don't really matter much.
Yeah.
What really matters is what is happening with this advance here. And going to this, starting with this low in January of 2023, we can see that Amazon has had a very, very strong rally to a new all-time high. And this is where that 90-day tariff pause came in.
Okay.
And at this bottom at 161, and we can see again the stock had shed about 33%, so went into bear market territory. But when I look at this rally from a wave principle, it looks like a textbook impulse is forming. We have wave 1, wave 2, and then we have a classic wave 3, which unfolded also in 5 clear waves. So this pullback then is for wave 4. So the forecast is for wave 5 to complete the 5-wave sequence. So looking at it from a medium-term perspective, say in the next 3 to 6 months, it looks likely that Amazon will make a new all-time high. But how far this wave 5 will go is very difficult to forecast. But again, after a 5-wave advance, we can then anticipate a correction in 3 waves. So short term, I am bullish on Amazon, at least making new all-time highs, and then it's just a question of how far will that wave 5 go, which is virtually impossible to forecast beforehand. But like I say, in the short term, at least, I'm expecting it to make new all-time highs.
It is quite impressive that it made that all-time high now recently, after the high that it made in 2021, because I remember that bubble in 2021.
Yes.
A lot of people were likening it to the dot-com crash, and then obviously we saw that bear market that you spoke about in 2023. So it's quite interesting to see now that we can actually see it even going above that most recent all-time high that we have. Yeah, really, really amazing. Let's get into Salesforce, another one that was also the favorite when we had that big bubble in 2021. How's that been doing? And this one with the graph, you're starting in the 2000s.
Yes, so this one, though, I must say, it's pretty much a similar story with
Amazon.
With Amazon, even though they've got such different starting points in terms of their early trading based on when they were listed. So we can see from 2004, also a very, very strong performance to this significant peak in November 2021. And then we had this significant bear market correction, which saw the stock shed about 60%. So likewise, without getting into the details of the prior advance, I'm labeling this as potentially a higher degree wave 1 or lower degree wave 3. Therefore, this as a higher degree wave 2 or lower degree wave 4. Doesn't really matter. What matters is what are we seeing with this rally, which took the stock to a new all-time high at 369. So starting from December 2022, similar with Amazon, which we just saw, which was in an impulsive advance. What I'm seeing with Salesforce is different. I'm also seeing 5 waves, but these 5 waves overlap, unlike Amazon. So as opposed to Amazon, which is an impulse, with Salesforce, we have a leading diagonal. And remember, I said once Amazon completes 5 waves, we then anticipate a 3-wave correction. We seem to have already had that with Salesforce. There's the 3-wave correction, ABC, and from this all-time high, the stock pulled back about 38%. So a pretty significant correction.
That's a significant one, yeah.
So the question then is now a good time to buy Salesforce? We can see there's a bit of a bounce, and here again is that tariff pause, which led to this small rally, and now we had a bit of a pullback. So my forecast is for more upside in Salesforce. But because the stock hasn't rallied much from this tariff pause advance, I would then use a stop loss at 230. So again, we can have a deeper correction, but then I'm still forecasting upside. But if the market breaks below 230, then I know the current outlook is invalidated, and I'll have to take a step back and do a reevaluation of the trend. But as long as 230 holds, I'm bullish on Salesforce.
All right. Well, let's move on to Cisco Systems. This one, I think there maybe been a couple of people picking it as their stock picks, but never really had quite deep analysis on it. Firstly, what do they do, and what is the technical picture looking like?
Cisco is one of those .com crash stories, those big .com crash stories. And I think the market at large sort of fell out of love with the stock after the .com crash. It was one of those companies that was literally on the brink of bankruptcy and pretty much crashed to failure. Yeah. So since then, the market hasn't really been in love with Cisco Systems. And also they've had quite a number of, call it, pivots in terms of their business structure, their business offering, their key focus on tech, web, and other spheres of the broader tech space. So it's a company that's still trying to sort of redefine itself in the market. And I mean, you can see since listing in 1990 that a massive rally, which peaked in March of 2000, and then in under 2 years, massive crash, losing about 90% of its value.
Of course, investors would be nervous after that.
Exactly. and again, this low is in October 2002. We are now in 2025, and you can see the stock is still approaching that previous all-time high of 2000.
And it's quite interesting because the previous two stocks, Amazon and Salesforce, have actually breached their previous highs. The fact that this one, it has not even come close.
Well, and again, we're talking about an all-time high from back in March 2000. So this has been a significant crash. But again, just from a technical perspective, and again, we can see that 2002 was a long time ago. But the question is there still upside? Can we see Cisco Systems make a new all-time high for the first time since 2000? So this is the significance of this chart for me, and also the fact that it sort of gives again that very important theme of understanding the fundamentals of the business and not just chasing a stock based on its technicals. But let's see what the technicals tell me in terms of potential for that new all-time high. So I'm looking at this advance as a 5-wave advance for higher degree wave 1. Then we have a classic ABC for wave 2. And this wave 3 unfolds first as a leading diagonal for wave 1, correction for wave 2, a strong advance for wave 3, and then we have this sideways correction, which I'm labeling as a triangle for wave 4. And now I'm looking at this as the early stages of wave 3, which is to complete the higher degree wave 5, which then completes the higher degree wave 3. So then the forecast would be for a correction for a higher degree wave 4 and further advance. So I think for the rest of the year, there's a high likelihood that Cisco Systems will make a new all-time high. So now at the current juncture, there is still upside potential in Cisco Systems. But again, when you look at companies like this, you really need to dive in the fundamentals and understand the story, what has changed over the last few years, because you can see how
it's struggled, hey?
It's been a struggle.
Yeah,
it's been really a struggle.
All right, a completely new one to me, Fidelity National Information Systems Services, rather. Talk to us about that.
Yeah, one of the less known stocks, and a very solid company, very solid fundamentals. And you know, America is very big on information. They're very big on intelligence, and this is where this company plays a significant role. Again, I mean, we can see how strong the rally was from 2002 to this peak in 2020, and then this very strong sell-off, which saw the stock lose about 70%. So putting that in an earlier wave context, what am I saying? I'm saying wave 1, wave 2, a very strong rally for wave 3, which made the all-time high, and then this wave 4, a classic zigzag ABC. So I'm looking at this now as wave 1, wave 2, and the stock is in the early stages of wave 3. So again, line in the sand at 46.91, but the wave count looks very, very bullish. And again, with for this one, I'd say give it a year or two, and we could see potentially a new all-time high. So
because it's very far off from that.
Very far off from that, but also in the very early stages of this wave 3. But again, like I say, line in the sand at 46.91. If the stock breaks below that, then it's invalidated. But as long as it remains above 46.91, I'm maintaining the bullish stance.
All right. It's very interesting because, I mean, as we mentioned at the beginning, a lot of these stocks are considered full. So really just emphasizing the fact that within that tech sector, don't put everything in one blanket. It's actually quite interesting also that how you can use technical analysis to actually see the opportunities that exist in the market. So really, really important. Thank you so much, Loyiso, for your technical analysis today. Really appreciated. That was Mshindi Bingwa Group Holdings founder, Loyiso Mbeta. And that's all for this week's segment, but do stay tuned for lots more coming up right here on Business Day TV.